Let's welcome in our guest in the morning. Mayuresh Joshi is now with us. Gaurav Bisa is joining us. Sumit Bagadia is also with us. Gaurav will be with us in just a second. Mayuresh, let's start with you. What are your calls for the day?
Morning, Pankaj. So going by the trend that the markets are witnessing at this point of time, I think the overweight stance, particularly looking after the Q3 results, clearly still stays with the larger banks within the BFSI space. The kind of impetus that the exchequer has given towards affordable housing, housing finance companies are expected to show a very strong performance going forward. And leaving aside a few aberrations that might come through in Q4 because of the partial effects of demonetization and remonetization taking its due course, my own sense is that selective stocks within the consumer durable consumer staple space also look attractive. So largely again, I think private banks like ICICI Bank is still something that I'll prefer in a staggered manner on declines. Within the PSU basket, State Bank still stands out for us. Housing finance companies, Canfin Homes has a very strong balance sheet, capital adequacy in excess of 18.5%. Because of the lower cost of borrowings and the cost of funds going down, close to 8.32% for Canfin and expected to go down further. My own sense is that the spreads in NIMs will expand going forward as leverage still keeps on playing on the balance sheet. Largely again, I think top tier IT companies as a basket in a staggered way on declines is something that I look at, but again as a basket because I think it takes care of volatility and also reduces their impact cost because of the impending issues related to H-1B visa and consumer discretionary spending, which will be determined in this quarter. So the large unknowns probably factored in, but again I think if there is some amount of uncertainty in the form and shape that the H-1B visa takes and the hard landing in Brexit, you might still have some amount of apprehension on IT stocks. So a staggered way of investing in a basket for top tier companies is what I like, and being very, very selective in terms of a bottom-up approach on the mid-cap universe space.
Sumit, what are your calls for the day?
Hi, good morning. Well, the first pick for the day is Infosys. Infosys has given a good move in last couple of days, and now looking at the chart, it seems that the same upside move can continue, and from here we can see levels of around 1050 or even 1070 in next couple of days. So purely for a trading perspective, one can initiate long position in Infosys at CMP with a small stop loss to be placed at 980 levels on lower side for an immediate upside of 105 for an immediate upside till 1050, and if 1050 is taken away, then we can see move till 1070 levels in next couple of days for next couple of days. So Infosys is a good buy at present levels. The second pick for the day is Bharat Forge. Bharat Forge has given a breakout, and now looking at the chart, it seems that this breakout move can move till 1140, 1180 levels in next couple of days. So for a trading perspective, one can initiate long position in Bharat Forge at 1080, or if there is a dip of around 8 to 10 points from present levels, then that can be used as a good buying opportunity with a small stop loss to be placed at 1040 levels on lower side for immediate upside till 1140, and if 1140 is taken away, then we can see extended move till 1180 levels also in next couple of days. The third pick for the day is from banking space, and that is Axis Bank. We feel that Axis Bank has potential to touch levels of around 520 in next couple of days. So for a trading perspective, one can initiate long positions in Axis Bank at around 490-500 levels with a small stop loss to be placed at 480 levels on lower side for immediate upside till 520 levels.
Right, Gaurav Bisa is also now with us. Gaurav, what are your calls?
Good morning. My first recommendation today is buy on Godrej Consumers. We have seen good amount of long positions getting built, some amount of resistance seen around 1620 levels. Once that is sustained, expect 100 points up move coming in. For trading, one can have a stop loss of 1600, play for as of 1680. Secondly, buy on Tech Mahindra. We have seen a lot of performance from the IT space. Many of the names are already moving too much. Tech Mahindra is one that has seen good amount of accumulation in long positions in options as well, but it has not been able to sustain 500 mark. Yesterday, it gave a good close above 500, so one can have a stop loss of 497, play for immediate targets of 520. And final recommendation would be sell on Asian Paints. We have seen short positions getting built on the verge of breakdown. Have a stop loss of 985. One can play for targets of 940.
Right. Let's just look at some other stocks that will be in news, and of course the key one will be HDFC Bank. In the pre-open session, it's already indicating a 10% higher start. Now, a big development has happened overnight for HDFC Bank. RBI has removed HDFC Bank from the FII ban list. Remember, it's a perpetual FII banned stock where FII is like this name, and it's always 74% in terms of holding. Now, FIIs can buy HDFC Bank. This is from the stock exchanges. Of course, this is for incremental shares, and from FII to FII buying, it was already allowed. Now, if you just look at the premium for HDFC Bank in terms of ADR, in terms of the FII window which is there on BSE. So for ADR, it's trading at a 22% premium. The FII window, it's trading at 11% premium than what it has done. So that is the sort of premium that it is being trading at. Foreign ownership in private sector bank is restricted to 74%, and as soon as you get to 72%, it comes under the RBI caution list. Now, there has been no major selling which has happened in HDFC Bank, but there have been some ESOP dilution which has happened. So there are some new shares which are issued, and because of that the foreign holding has gone below the prescribed limit, and that's why RBI has gone ahead and removed this from the FII ban list. Now look, speaking to a lot of traders, a lot of people who track this news, estimated buying is of around 30 to 35 lakh shares. It's a very small window which is there, and it should get completed in probably today or tomorrow's trading session, that is Monday's trading session. Stock can be up about 6 to 7% today. HDFC Bank is 30% of Bank Nifty. So what happens to Bank Nifty, what happens to Nifty will also be particularly interesting. That's HDFC Bank. This is the pre-open price for you, 8.5% already higher for this name. Gaurav, in terms of this 2-3 day buying that could happen in HDFC Bank, how do you think the derivative markets would respond to this? 8% pop would mean that there could be a lot of short covering as well?
Well, I would not say there will be short covering. We have seen aggressive long positions getting built, and there have been very less amount of short positions in HDFC Bank. So I would say there can be some amount of long unwinding that can be seen, but for the time being, I would say it's prudent that if it opens to 8-10% up, book profits at these levels. We may get it at lower levels as well.
Right. So do you think that today it will make a top, at least in the near term?
I hope so. I feel so that we can see some amount of pressure the opening hours on itself.
And what happens to Bank Nifty? It's 30% of Bank Nifty as well.
Well, you have seen Bank Nifty trading near 21,000 mark, so it's a strong breakout about 20,500, and going ahead, if it sustains, if it feels a dip towards 20,500, now that will become a strong support. It will provide good buying opportunities. So I think the stage is set for 21,400, 21,500 in Bank Nifty.
Right. Another stock that will be in focus will be Biocon. US FDA has accepted Mylan and Biocon's joint application for biosimilar application, but however they have just accepted it for a review. It's not that they have gone ahead and approved this particular drug. The biosimilar application which they have done is for cancer treatment. Application is now the second application into US. 3 they have done into Europe, and this is the second one that they have done into US. However, these things take time for approval, and that's why probably the street may not be very excited at this point of time. Again, this is the pre-open price that you can see, 1.2% higher, 1109 for Biocon. Off late, the stock has done very well. The total size of this drug in 2015 was around $4.7 billion. So it could be an interesting opportunity, but the approval is needed. As of now, there is no approval. It's an acceptance for review. Again, that's a big thing, because a lot of drugs don't get acceptance for review as well, because there are a lot of changes that one needs to do. And this is the second straight drug from Biocon Mylan into US, which has got an application for review. Mayuresh, how would you look at Biocon? Positive news flow is coming in, but I was looking at the valuation. It's now one of the sector leading valuations in the pharma sector.
Oh, absolutely, and again I think the kind of pipeline that Biocon has, yes, I think incrementally as approvals start taking place, they will add to the earnings of the company going forward. But then there is also a huge component of the Malaysian facility. The Malaysian capex has been pretty large for Biocon, and the kind of maintenance capex that still needs to get pumped in for that facility is pretty large. So once that gets on stream, utilization levels start improving, you will see consolidated earnings grow at a very reasonable pace over the next 2 to 3 years, subject to the approvals that you're probably talking about at this point of time. The key drugs, Glagin has received plenty of good responses. It has got accepted in the Japanese markets. Transnusubab drug, again, I think has got accepted into the market. So there are huge potential in terms of the drug launches that you're probably talking about. But largely, again, I think valuations at this point, with the kind of run-up that you've probably seen, captures to a large extent the kind of earnings growth that one expects from the stock over the next 1.5 years, to say the least. As approvals start taking place over the next year and a half too, over the remainder part of the drugs which are there in the pipeline, and the Malaysian facility, as I said earlier, starts operating at a very healthy utilization level, my own sense is that the earnings will compound.
Okay, I think that there is an issue as far as his link is concerned, but what he was talking about the valuation and the pipeline that they have. Let's stick with the pharma focus and let's focus on Cadila as well. Of course, it was the stock of the day yesterday. It was up around 22%. There was positive news flow which came in. So US FDA has cleared all the observation for Moria site. Why Moria site is important? It's the biggest site that they have. It's the best site that they have in terms of application. Yesterday, the stock was up 22.7%. This is delivery marked. It is 17 lakh shares, which is quite significant, and the OI change, that's the open interest change, is about 7.2 lakh shares. So overall, there was bullishness as far as Cadila is concerned. Now, why this plant is important? So Moria accounts for roughly around $360 million in terms of sales. This is the US sales that we're talking about. It's about 60% of the US sales that Cadila has. So it's by far the largest facility that they have which supplies to US, which is their biggest market. They keep on filing a lot of drug with the R&D spend that they do. 40% of the pending pipeline has come in from this drug. Since the time there was issue with US FDA, there was no drug that was approved. Till now, only the observations have been removed. The EIR closure, which is the official communication that there are no problems in the site, would come in due course of time. So that is something which Cadila will now be the next trigger for Cadila. This is Biocon, 1.2% higher. Cadila was up around 22% yesterday. It may not be a big mover today, but definitely it will be a stock in focus which a lot of people would essentially want to take a call as to what happens for Cadila. Just staying with the Cadila news, there is also some effect that will come in on Dr. Reddy's because of this particular approval which has come in. Now, why this is important is, firstly, Credit Suisse is highlighting this, and they are saying that Moria decision will impact Dr. Reddy's EPS by around 5%. Why will this happen is because Cadila has a tentative approval for 2 drugs which are very important for Dr. Reddy's, and that's why these 2-3 drugs would be very, very important. Credit Suisse is saying that FY18 EPS can be impacted by about 5%. Cadila already has tentative approval for one of the drugs that Dr. Reddy's sell, as well as Tropol XL, which is also an important drug for Dr. Reddy's, coming in from Moria facility. Tropol is among the top 3 products. Sirolimus is currently a 2-player market, with Dr. Reddy gaining a lot of margins and market share over there. So this becomes essentially an important development for Dr. Reddy's as well. So these are the 2 stocks also that will be in focus. Sumit, a quick word on Cadila as well. Say if it opens around 440 where it closed yesterday, what will be your call post that?
See, Cadila has given a very good upside move yesterday. In fact, in the day itself, we have seen that stock has moved up by almost by 60 to 70 points. Now, looking at the chart immediately, what we can see is that there is a resistance at around 455, 455, 56 levels. So if 455, 456 is taken away, then we will see a fresh upside move of around 8 to 10% from 455 levels. That means if 455 is taken away, then we can see levels of around 500 soon. Now, immediately looking at the chart, those who have taken positions at lower levels, they can hold on the existing positions, and if anyone wants to initiate a fresh long positions, then they should wait for small dip in the counter till 420 or 415 levels, and on lower side, if we see levels of around 450, 420, then fresh longs can be initiated. But at present levels, fresh longs are not advised, and if any of the existing positions are there, then they can hold on the existing positions with the trailing stop loss to be placed at around 410 levels for an immediate upside till 455, and if that is taken away, then we will see extended move till 500 levels.
Right, we should get the opening anytime soon, and rather than Nifty today, HDFC Bank and Bank Nifty will also be in focus. A lot of levels are expected to go here and there because it's a big stock, it's a big weighted stock, first on Bank Nifty and then on Nifty as well. These are the first trades for you. 100 points higher for the Nifty, and I'm sure it could be because of HDFC Bank only. HDFC Bank is about 8% higher right now. That's taking the markets higher. Nifty is up at 8872 levels. It's broken all the levels, and I think it's going towards the third resistance. That is HDFC Bank for you, 1435, 1440 as far as HDFC Bank is concerned. 8% higher, and it's looking in extremely strong at this moment. 3 million shares already traded, so there is a lot of action in this counter as well. Not that domestics would just come out to sell, but domestics are also overweight on this stock, and that's why it becomes very, very interesting. 1434 right now for HDFC Bank, 8% higher. That's Reliance for you, a flat with a negative bias, and GAIL is also on the positive side. That's Biocon, 40,000 shares traded already, 2.5% higher. I think it's in a new territory. It's at a new high, so really very difficult to comment as to what will happen as far as levels are concerned. Let's look at Cadila as well, 3% higher. So it's exactly where it closed yesterday. 439.40 is where it closed, and that's precisely where the stock is right now. So it's mostly factored in the impact of Moria facility coming in. That's Cadila for you, 4.5 lakh shares traded for Cadila. Let's look at some of the other stocks in news. So Siemens has backed an order, 3,000 shares traded, not much in terms of volume. 1,217, 1,218 for Siemens, 0.8% higher. IDBI Bank, that's also got some news flow regarding a board meet. It's up around 1.4%. So that's about 82 rupees or so. Finolex Cable, it had some corporate action, and maybe that's why it's one of the buzzing stocks. It's up around 2.6%. Let's look at BHEL and Idea, and what's happening over there. They have been excluded from the Nifty. IOC and Indiabull Housing has been going into the Nifty. That's BHEL, 1.8% lower, 3.5 lakh shares traded. Let's look at Idea as well. That's also among the top losers, about 1.7% on the lower side. Nifty Bank is now at a record high, closer to 21,000 because of HDFC Bank, of course. IOC and that's Indiabull Housing. Indiabull Housing is up around 5%, 870 for Indiabull Housing right from the word go. It's being included in the Nifty, and that's the impact that you can see. That's IOC for you, around 2.5 to about 3% higher. Very, very strong as far as some of these moves are concerned. Let's look at some of the other mid-cap gainers and what's happening in terms of volumes, where there is a lot of activity. So HDFC Bank, of course, among all the indices is coming at a high. It's up around 8%. Very strong volumes. Already 14 million shares traded. The estimated buying is close to about 3.5 million shares. So that's already 14 million shares traded. That is HDFC Bank for you. 14 million shares. Let's look at the volumes of HDFC Bank as well, and HDFC Bank as to what's happening over there. Indiabull Housing is up 4%. That's the volume. 15 million shares traded for HDFC Bank. I'll just take out the average as far as 10 days concerned. It's close to a million shares. So it's already trading way higher than what it does in terms of normal volumes. Indiabull Housing Finance, that's the second gainer, which is up 4%. Okay, let's look at IndusInd Bank as well. So IndusInd Bank is up 3%. There is a very big report which is coming from Morgan Stanley, which is saying that it's a mega cap which they expect in terms of creation. That's why it's probably up with good volumes. 2 lakh shares traded, 2.6% in terms of gains as far as IndusInd Bank is concerned. Canada Bank, IOC, Cadila Healthcare is also into this list, but it's off the day's high, but it's still around 430. Biocon is up around 2%, 1,118. You'll be hearing from the management of Biocon very soon. The other pharma stocks also are doing well. So you have a Aurobindo which is doing well. Some of the other names also in the pharma pack are seeing action. NBCC is down 6%, and that's because it's got X bonus today. This is the X bonus adjustment which has already been done. So the bonus adjustment has been done, and post that it's down about 5%. So that's a 10 rupee decline for NBCC. BHEL, we spoke about it going out, similar as the case with Idea. Prestige is also down about 0.9%, but Prestige Estates has no volumes at this point of time. Let's go back to our guest, Mayuresh. HDFC Bank, 1,440. Now it's trading very expensive.
It is, and it has always traded at premium valuation, Pankaj, and for rightful reasons. So over the past few years, we've probably seen the bank grow in excess of 25%. That has got moderated because of the expanded pace that the bank has built. And again, I think the earnings growth in excess of 20% is well accounted for the bank in terms of both its branch network as well as the product suite that it has got. Secondly, even in terms of the asset quality, I think the asset quality pressures are not that evident because it's a retail facing bank, and the kind of products and the reach that it has both in terms of its branch outlay as well as the retail customer base that it has in terms of CASA ratios supports it during volatile times as well. Now the advances growth has been extremely robust, and it is expected to be so over the next few quarters, as financial inclusion still takes place over the untapped parts of the territories in India, my own sense is that HDFC Bank is extremely well placed, not just to cater to the urban needs, but again in terms of digitalization and banking needs on that front. I think it is very much on that forefront. So I think on all counts, it probably stands out, and the premium justification in terms of valuation probably stays with its tag. So I think we do like this bank from a long-term perspective, and it's a clear hold for us.
Right, but with the news flow that has come in regarding HDFC Bank and the technical adjustment which FIIs may actually look to buy into, that doesn't fundamentally change the view?
I think this technical adjustment probably will take the price higher, as you're probably seeing and getting reflected on the screens right now. But as I was mentioning, I think the growth still should start coming through, and it is coming through on that 20% kind of a mark. And even with the large base that it carries, it is extremely commendable in terms of the advances growth that the bank is still witnessing. And also there was a lot of payout that happened with the FCNR deposit that it had raised. But largely again that has got compensated with the kind of deposits that it has received during the demonetization drive. So largely I think my own sense is that asset quality should improve not just for HDFC Bank but for the banking industry as a whole over the next few quarters. And this will drill down credit costs further and lead to an improvement in the return ratios. So again, I think remain optimistic, as I said, on the private banking space, because I think the earnings growth over the next 2 years, as credit growth will start picking up, which is around 6-7% at the current juncture, as it moves into higher trajectory of double digit, with the lion's share being taken by retail advances on all counts. My entire sense is that HDFC Bank can actually ride that credit growth in a much efficient and effective manner.
Right. Gaurav, we know we've already taken your view as far as HDFC Bank is concerned, but looking at the volumes, looking at the multiple trades that it is doing at, do you think that, it's not going to fall?
Well, it's too early to say, but I would say that there have been sufficient long positions. This is a trade that we have been discussing in the opening hours, that there can be some aggressive buying from the FIs, but I don't think there will be consistent buying from these levels. We may see a couple of percentage higher, but I think from today itself we will see a good amount of long unwinding from the domestic side as well.
Today you will see, you mean FIs will buy and domestic will sell?
There is a possibility domestic can sell, and even some part of retail can sell, because a lot of people have been getting on HDFC Bank. Is the only bank that has been quite stable in last 10 days. When Bank Nifty was trading and having jitters, HDFC Bank was the only one that was quite stable and giving good amount of return. So I think there will be good profit booking towards the end of trading session.
Right, again, as this is a technical adjustment, on Monday or Tuesday you can again get this into the restricted list.
There's a possibility.
And that would again mean that this buying would go away.
If not go away, it would at least see the intensity getting lowered and lowered.
Right. Can you just talk to us, how would you look at a trader who's trading Bank Nifty? Do you think other banking stocks will play a catch-up role at least for a couple of days, because they are part of component of Bank Nifty as well? So do you think other banks with the peer pressure may actually go up at least in the near term?
I would not term it that way. If you look at PSU banks, they have not been having the kind of rally that some of the private sector banks have been doing. And until unless we don't see participation from PSU banks, I would not be of the view that we will see a strong upside in many of the other many of the other banking names. So I would wait for a dip. If it comes to 20,500, I think that will be time from where we can see good amount of participation from banks across. For the time being, it would only be banks like Kotak Bank or ICICI Bank for that matter that can see another 3 or 4% gain from the current levels.
Right. Mayuresh, what will you do with something like an IndusInd Bank? There is a report from Morgan Stanley today which suggests that it could be a mega cap in making. Do you think it can continuously perform the way it is, and which means that valuations are still cheap versus estimates? Sumit, what is your view as far as IndusInd Bank is concerned? 2% higher right now.
See, Pankaj, overall banking stocks are looking good. And if we have a horizon of next 6 to 8 months, then I think in most of the private banking space, we will see a very good upside rally from present levels too. As far as IndusInd Bank is concerned, it's presently quoting around 1347 levels. I think from present levels, still there is a upside steam left in the counter. Immediately the stock has supported around 1310 levels. That means till the time 1310 levels are not taken away, any dip from present level should be used as buying opportunity. And on high side, immediately there is a possibility that we might see levels of around 1380 or 1400. So immediate range for the counter is 1310 on lower side to 1400 on higher side. I think presently one can initiate long positions at 1348 levels, and if by chance there is a dip in prices till 1335, then that can be used as a good buying opportunity with a stop loss to be placed at 1310 for the targets of 1380 1400 levels.
Right. Mayuresh, just a word on IndusInd Bank. What do you think? Fundamentally, it will continue to outperform?
It was not disappointed, Pankaj, as I was mentioning earlier. I think the bank has performed on all counts, like HDFC Bank, in terms of advances, deposits, in terms of their asset quality as well, and in terms of growing their book specifically on the CV part of the business. Secondly, I think you consider the base. The base, again, it's quite low if I compare it to the larger banks like an HDFC, or even to that matter something like an ICICI or PSU banks like SBI. So there is every scope for improvement happening on that count in terms of absolute numbers coming into account over the next few quarters. Valuations, again, I think for IndusInd Bank have traded at higher multiples, but again, I think if such kind of growth continues, I think the same justification can happen. So like I mentioned for the large basket IT stocks, banking stocks should also be approached probably in a similar fashion, probably have to get accumulated in a staggered manner over the next few weeks or months, because that will take care of volatility and reduce the impact cost if the markets do correct from the current levels.
Right. Mayuresh, there was a buzz around CEAT and what's happening with the price hike for the tire companies. You think if tire companies take price hike, it will come as a positive surprise?
Again, largely expected, because if you look at the raw material trend, natural rubber prices have moved up significantly over the last 3 to 6 months. Synthetic rubber prices have moved up. The nylon cord fiber prices also are relatively higher. So the input cost inflation is definitely a cause of concern, and it was an obvious reaction that they had to increase prices. Now again, I think with the entire trend of demonetization, remonetization, you might have some amount of aberration in terms of volumes. But largely, again, I think my entire sense is that pay commission recommendations are expected to come out. You're already seeing a good winter crop getting harvested. So with a good Rabi output coming through, my own sense is that there will be disposable income which will be much higher in terms of rural and semi-urban areas, and that again will give rise to discretionary spending going higher. So in that sense, again, I think a lot of the stocks which will get affected in a positive manner from the first half of FY18. And as the end user constraint for working capital also goes down in terms of credit demand, again, I think that will provide an additional fillip for these companies. So auto stocks generally should do well in terms of volumes picking up over the next few quarters, both on the four-wheeler and the two-wheeler side. The CV market should also pick up slowly and gradually over the next few months, and that will give fillip to tire stocks, which probably over the next few quarters can have operating leverage as volumes start picking up on their balance sheet. So margins will not expand because crude derivatives and raw material prices have fallen significantly over the past few quarters, but margins should remain stable. And again, I think with improvement in demand, the volume activity should pick up. So I think JK Tyre is something that I'll still continue to prefer on declines.
Right. Gaurav, in terms of derivatives activity, what do you expect going ahead? Where do you see the expiry for Nifty?
It becomes very difficult to pinpoint. The reason is that we have been trading in a very narrow range. So for last 10 trading sessions, we have been between 8720 and 8820. If it holds 8820, if you have a closing above 8830 today, and then the expiry is expected to be around 8900, 8920 levels. And if we again fail to sustain the current levels, then there's a possibility that expiry might be on 8750, 760.
Right.
8750, 8760 if Nifty fails to hold on to the levels of 8830 today.
But 8830, which was of course the resistance that was been happening for a while, because of HDFC, the market has actually gone up beyond these levels. Even if it is only because of HDFC and markets close above that level, it would mean a positive divergence.
Yeah, that would be positive, irrespective of what the whose influence that has been. The point is that if Nifty sustains 8830, the possibility of a short covering would increase. We have already seen that. So I think another 100 points cannot be ruled out from the current levels if it holds on to 8830.
Right. Mayuresh, what will be your call on Nifty? Do you think that markets are now factoring in a lot of growth coming in Q4 and FY18? Any disappointment over there could mean that there could be a lot of correction?
No, again, I'm not really sure about Q4, but the general consensus has been that for the entire part of this fiscal, I think the earnings downgrades have happened. And even on the macroeconomic front, you're probably seeing contraction happening in terms of both the GVA and the GDP estimates. So from that angle itself, I think corporate earnings recovery is expected to be quite reasonable over the next 2 years. For the next year itself, I think if you're looking at real GDP at 7, inflation at 5, the nominal growth should be anywhere around 12%, which means that the earnings growth should be close to around the 12-13% mark. And considering the low base that you are coming out of for this fiscal, it should look as a compounded figure in absolute numbers that get reported for individual stock sectors. So largely again, I think expecting corporate earnings to probably grow in that range of 12 to 13% for the coming fiscal. And as these earnings start growing at a reasonable pace, as the private capex starts picking up by the second half of FY18, because a lot of government spending is happening, and with the budget in place, I think a lot more will happen in terms of capital spending over the next few months, and that will probably give a fillip to private capex. As that part of the capex activity starts picking up, the entire sense of the credit growth argument picking up for other and ancillary industries should also happen, and that's the base case scenario that we're probably working with. So it's going to be a slow and gradual recovery from the first half of FY18 as far as earnings is concerned, but margins and markets can probably be looking at how the local elections can probably happen. So I think you can expect some volatility to come through domestically in terms of how elections results are expected to pan out, and globally again, what actions are probably taken by the Fed. The markets have just stated a couple of hikes happening over the next 6 months from the Federal Reserve.
Right. Sumit, what will be your call on PSU banks? Let's start with Canara Bank. It scores X rights today, but it's up around 2.8. Any other PSU banks that you like?
See, Pankaj, as I already said, that most of the banking stocks are looking good to me as far as private or PSU is concerned. I think PSU banking space are also looking good. Immediately looking at the chart, what I can sense in Canara Bank is that in last couple of days it has given a correction from higher levels, but the overall structure is looking good. So if there is a dip of around 5 to 7 points from present levels, then that can be used as a good buying opportunity. And if anyone wants to initiate a fresh long positions at present levels, then they can go ahead, because immediately the stock looks like that it will move up till 310 levels, and if 310 is taken away, then we will see accelerated move till 330 levels. So overall, this structure is looking good. I think one can initiate long positions in Canara Bank. And on the other side, I think SBI is looking good for longer term time horizon. One can initiate long position in SBI Bank at CMP, because overall the structure of SBI Bank is looking good, and we are expecting SBI Bank to touch levels of around 300 very soon. I think 280 is the minor hurdle for SBI Bank at present levels, and if that is taken away, then we will immediately see a move till 300 levels, and if 300 is taken away, then we will see 330 also. So overall, my targets on SBI Bank are 330 for next couple of months. I think from present levels one can start initiating long positions in SBI Bank till 250 levels on downside for an immediate upside till 300, and then we can see a move till 330 levels.
Thank you so much, gentlemen, for taking out time for us this morning. Just before we go, Gaurav, let's start with you. Any disclosures?
No personal holdings in the stocks discussed today. It is possible that we may have recommended the stocks or strategies to our clients at LKP.
Mayuresh, disclosures for you?
Pankaj, no personal holdings in any of the stocks discussed, but it is possible we have discussed this for our clients, and we might be holding these stocks on behalf of our clients and our funds.
Sumit, finally for you as well?
Pankaj, we have personal. I have personal holding in Infosys and Axis Bank, the stocks which I have given as a trading calls, and also all the frontliner stocks which we have discussed on NDTV Profit. We discuss the same with our clients on regular basis. So it's better to assume that our clients might have position on the stocks which we have discussed. Thank you very much. Thank you very much.
Thank you so much, gentlemen, for taking out time for us. Always good to get a perspective. On that note, we're taking a break.